Good morning and welcome back to Storm Stock Solutions. I'm Grant Mercer and we're getting you set up before the opening bell, here to bring some clarity to the chaos in today's markets. The tone heading into the session is all about cross-currents, pressure in select earnings names like PayPal and PepsiCo, a rebound attempt in precious metals after a bruising sell-off, and big pharma caught between exciting drug headlines and policy headwinds. Let's start with the key drivers on the tape this morning. According to reporting from MarketWatch, Pfizer is front and center. The company released data on a once-a-month weight loss drug candidate that showed patients losing up to 12% of their weight. That's a meaningful number in a market that's been obsessed with obesity drugs as a multi-year growth story. But there's a twist. At the same time, Pfizer is forecasting a profit decline, pointing to the impact of the Trump administration's policies on drug pricing and tariffs. So on one side, you've got a potential blockbuster-style pipeline asset that could reshape the competitive map in weight loss. On the other, macro and policy forces pressing margins. Traders will be watching how the whole pharma and biotech complex trades around this. Does the market reward the pipeline or stay focused on pricing pressure and tariffs? Another macro-adjacent theme comes out of gold and global markets. MarketWatch highlights analysis around how last week's jolt from Microsoft, the tech heavyweight in question, helped pull the rug out from under gold and a range of trendy assets. That's important context for what we're seeing this morning in precious metals. After a near 13% two-session plunge in gold, we're now seeing gold and silver finally rally. This looks like an oversold bounce attempt in a space that just went through a record-setting shakeout. On the opportunity and strength side, that metals move is exactly where traders are leaning in. The gold and silver rebound, as highlighted by Steve Goldstein at MarketWatch, is the first sign of buyers stepping back into a space that just saw extreme volatility and forced selling. Short-term players may view this as a classic mean reversion pocket. Oversold conditions, heavy fear, then a bounce. Longer-term investors, meanwhile, are wrestling with questions raised in another MarketWatch piece. After such a dramatic fall, do gold and silver still belong in a diversified retirement portfolio? The answer is going to be different for everyone, but what matters for today's session is sentiment. If the rebound in spot metals and miners holds through the morning, it could signal that the worst of that particular panic has passed. For now. Outside of metals, we're also seeing strength in personal finance and household balance sheet themes. One heavily read story this morning covers a woman who inherited $400,000 and is asking whether it's wise to use that money to buy a house with her fiancé. That doesn't move an index, but it captures a broader backdrop. People are trying to navigate housing affordability, elevated rates, and big life decisions. When you see a lot of attention on these pieces, it often speaks to anxiety and opportunity around real estate and savings behavior, which can filter into how consumer and housing-related stocks trade over time. On the flip side, let's talk about the weak spots and the names to handle with care at the open. PayPal is right at the top of that list. According to Emily Berry's reporting at MarketWatch, the stock is sliding after disappointing earnings and a major slowdown in a key metric that investors closely watch for growth. At the same time, PayPal is ushering in a CEO change, bringing in HP veteran Enrique Lores to try to turn the ship around. That kind of earnings miss plus leadership reset tends to raise as many questions as it answers. Short-term traders may treat this as a show-me story. Skepticism until the new CEO lays out a clear strategic plan and demonstrates traction. Payment and fintech peers may trade in sympathy, at least at the open, as investors reassess the group's growth assumptions. Another area to watch with some caution is consumer staples, specifically big food and beverage. Tommy Kilgore at MarketWatch reports that PepsiCo is set to pull back, despite beating earnings and boosting its dividend. The interesting wrinkle? PepsiCo has actually been cutting prices on core snacks like Doritos and Cheetos after customers complained about affordability. That's a reminder of how sensitive the consumer is right now. Even with a dividend hike, if the market thinks pricing power is eroding, it may question future margin strength across the packaged food space. Today, traders may keep a close eye on how the broader staples sector reacts. This could reinforce the narrative that the consumer is stretched and value-conscious. Now, a couple of under-the-radar stories that are worth keeping on the background watch list, not as recommendations, but as setups that could matter more if conditions shift. One is Merck. As Jamie Lee reports, Merck's outlook for 2026 came in below expectations, and the stock is under pressure after issuing lighter revenue and profit guidance. The company is entering what's described as a make-or-break year for its pipeline. That's the kind of situation where a single trial result or a regulatory decision later in the year can dramatically change sentiment. For now, this may not dominate the headlines like Pfizer, but professional investors will be tracking every data point from Merck as the year unfolds. Another sleeper theme ties back to family wealth and estate issues. There's a widely read MarketWatch piece about a brother allegedly stealing $500,000 from an ailing father. Again, not a ticker-specific story, but it speaks to the growing focus on inheritance, guardianship, and financial controls as trillions of dollars move between generations. Over time, that backdrop can support demand for trust banks, financial planning services, and legal and compliance tools. Today, it's more of a background sentiment theme than a direct market mover, but it's part of the bigger picture of where financial services demand may grow. Stepping back, the macro setup into the bell is a tug-of-war between policy risk and innovation. Pfizer's weight loss drug news underscores that the healthcare pipeline is alive and well, but it's running into tariff and pricing policy headwinds out of Washington. In tech, recent volatility in megacap names has been powerful enough to spill over into commodities and so-called alternative assets. And at the household level, concerns around cost of living, housing decisions, and retirement security are driving a lot of the conversation. As we head toward the open, traders will be watching whether gold and silver can hold this early bounce, how harsh the first reaction is in PayPal and PepsiCo, and whether the pharma space trades more on pipeline optimism or on fear of pricing pressure and tariffs. We'll be back with intraday updates once the market is up and running to see which of these themes actually take control of the tape. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer.